What's going on, people? So in today's video, this is a live session, but I'm going to be talking about my swing trading strategies. So I'll be talking about the fundamental analysis aspect, the technical analysis aspect, the learning, understanding, executing aspect, all that kind of stuff. What I'm going to be doing is sharing my screen, showing you guys what I look for, just giving you guys a little insight into, how best to swing trade, especially in this kind of market. As you guys know, right now we're in the first month and a bit of the new administration. So obviously things are a little bit difficult. And the best thing you can do, the most important thing you can do in this time is just protect your capital, protect yourself, and yeah, that's the best thing to do in this time. So what I'm going to start doing right now is just sharing my screen, and I'm going to do this on TradingView. So everyone should be able to see my screen right now. What I'm going to first do is go to the S&P 500 index, also known as SPY, ticker symbol SPY. And now I'm going to go to the daily chart. So my trading strategy, a little bit of background, okay? Hold on. Let me do this. Okay, so my trading strategy, right? Like I said, I use technical analysis and I use a bit of fundamental analysis on top as well. But first and foremost, before anything else, as a trader, a new trader, an intermediate trader, beginner, whatever you are, your first step is always to learn and understand. A lot of people in recent times, because of how the market was going, because of the switch of administration, all that kind of stuff, was just jumping into trades anyhow, was just doing anything. Sure, some of them were winning big from early on. Majority of them didn't know what they were doing. Some knew a little bit of what they were doing. But the first thing I want to say, the first thing that you guys really need to focus on is learn, understand. Then only when you're comfortable with that, you should really be implementing it in the market, and you should be able to do this on your own eventually. So if somebody posts a chart like this, you should be able to zoom out and say, is this bullish? Is this bearish? Do I even know what bullish and bearish means? Is this going, is this likely to go up in the long term? Is it likely to go down? What am I looking at? What are these green lines, orange lines? What are these, candlesticks showing me? All that kind of stuff should honestly be your priority. Obviously, you want to make money, you want to, grow your portfolio long term, great. But you're not going to be able to do that if you don't learn. Take the time to learn and understand. Then only when you're comfortable with that, you can then implement it in this market. And obviously, I'm doing stocks, but you can do this for futures. You can do this for crypto. You can do this for, I don't even know what, commodities. You can do this for a lot of things. So that's a brief background about this market, about my style of trading. But yeah, I love high probability trades. I also love low risk trades. So that combination is quite nice. High likelihood that a trade is going to be profitable. Yeah, that's what I like to hear. Low likelihood that the trade goes the wrong way. That's what I like to hear. If I see something and you say, oh, this is a $1 stock, but it could go to $50, that's a high risk and very low potential trade. The probability is very low there. The risk is very high. Yeah, it could pay off big, but that's not my style of trading. So let me see. How I want to start this is just show you guys a few things that are on this chart. I'm going to see if I can find a better chart. Let's see, Apple. Yeah, this is nicer. All right. So Apple. Here you have a green line, an orange line, a red line. These are the EMAs. Now, when I trade, the way I trade, I use EMAs. I use indicators. I use structure. I use support and resistance, which are these lines. And also candlestick patterns sometimes for a confirmation. So whether you're using just one of those things, whether you're using all of them, whether you're using some and not the others, the end goal is never the same here. I aim to trade the trend, right? So what do I mean by trading the trend? Well, if you zoom out on Apple, the trend here, let's say the last couple months, it's pretty bearish, right? It was up at 259, 260 is now 232. So the trend would be bearish here. If I go to a stock like Alibaba, ticker symbol BABA, well, you can see the trend here is bullish. Now, what is telling me that the trend is bullish? Well, you see the price used to go up, right? It was at $80 a month ago, $80 a month ago. It is now $113, right? So the trend is obviously bullish. The trend is saying that this looks like it's going to continue going higher. Now, what else can help me identify the trend? Well, these lines right here, the green line, the orange line, and the red line. Again, these are the moving averages. So here we have price action, all the candlesticks on the daily chart above all of the moving averages. That's an indication of a bullish trend. You go to the 4-hour time frame now, where each candle is a 4-hour time period. All of the candles are above the 9-day, the 21-day, and the 200-day moving average. And sometimes I switch the red one. Sometimes I switch the 200 to a 50. So sometimes you'll see it a little bit higher. But either way, price is above all the moving averages. That's a bullish indication, right? Still here, above all the moving averages. And this is going to come in handy when I go deeper into my strategy later on. So again, if you want to identify a trend, one of the first things you want to do is look where price is going in the long run, where price has been going in the long run, right? Don't think about what happened here. Don't think about what happened here. Don't think about what happened here, these lows. Zoom out and say, oh, wait, a week ago, price was at 99. 2 weeks ago, price was at 89. 3 weeks ago, price was at 80. That's how you want to look at it. Not, oh, a day ago, price was at 108. And it dropped off from 112. No, that's not how you want to look at it. That's not how you identify a trend. Go on a bigger time frame to a daily chart and then look at all the price action, look at all the candlesticks and see, okay, yeah, they're above the moving averages. Price is going higher and higher each day. All right, I see what I'm seeing. I'm trading the trend. So when you're trading the trend, one thing to look at, because people can panic, people can sell out of their trades. You want to identify. Let me see. I'll get a better chart. But we can go with Tesla actually. All right. Okay. Here's a great chart. All right. This is very obvious where this is going. Everyone can see it. We hit 490, sold off. We came back to 438, sold off. Everyone can see where this is going, right? It's bearish. It's going down. One thing about this kind of chart is what people often tend to do, especially as beginners, is say, okay, you know what, I'm going to trade it back to the upside. Meanwhile, it's just selling off and selling off and selling off and selling off and selling off, right? It's below the moving averages. The price is below the moving averages. The moving averages are pointing downwards. This is bearish. This looks bad. Tesla right now looks like it could get killed. And last week, Wednesday, I believe, so exactly a week ago, I called out a Tesla. Well, I wouldn't even say call out. I posted a Tesla chart just showing you the moving averages and showing you the price action and saying, hey, it's at 370 right now. I'm looking for it to go to 359, which is my line of support. And then obviously we broke that. We're still going down, and Tesla could end up at $300. It really could, right? It's getting killed. It's just tanking. It's just selling off. And honestly, there's so much blood on this chart right now, on this Tesla chart. Every green candle you see is followed by a red candle. Every green candle you see on Tesla chart is preceded by a red candle. So again, if you're not familiar with the markets, how it works, all that kind of stuff, you need to understand, hey, when a stock is selling off, let it sell off. Don't try and catch it, because you're going to catch a falling knife. You're going to catch something that's just continuing to drop, continue to sell off. Hold on a sec. Let me see. All right, I'm screen sharing, but no one can see my chart. So let me figure that out. Let me see what's going on. Figure out what's going on with the screen share. Oh, they can see it. Never mind. If you can't see my chart, you need to update your Wi-Fi or pay your phone bill. I don't know which one. But what was I saying? these people that didn't pay their phone bills distracting me. All right, yeah. So I was saying we want to see trends. We want to trade the trend. It's way easier to trade the trend. Every time a stock is selling off and it just comes back up a little bit, it's just going to come in. It's just coming back up to sell off again. We call that a retest, right? So again, we're going to talk about Tesla. Tesla on the 30th of January was at 415. It pushed a little bit to the upside on the 31st of January, went to 419. Then it started selling off. Gap down to 381. Pushed up a little bit, sold off. Pushed up a little bit again, sold off. Pushed up again, sold off. And you can go to the daily chart, you can go to the 4 hour chart, you can go to the 1 hour chart, you can go to so many different time frames. And yes, there will be some green candles in there. But if you know how to trade a chart, if you know how to analyze, if you know technical analysis, those green candles are they're just people taking profit, or people trying to push the stock up a little bit. Price action is just kind of trying to shake you out of the play. But if you can read a chart or whatever, you've got the right indicators, you understand structure, support and resistance, all that kind of stuff, trust me, all of that is just, we can call it noise, distractions. All of it is just distractions from the money. The real money in the chart is just trading the trend. If you trade the trend, you can't go wrong. Again, every single time you see a green candle doesn't mean the stock is going to start running up. Every single time you see a green candle in a bearish market doesn't mean the stock is going to start flying. Every single time a stock pushes up a little bit, it can still sell off majorly. It can still sell off heavily. I got to tell you again, every single one of these stocks, no matter if it's bearish, bullish, whatever, it's never going to just be straight red candles. It's never going to be just straight green candles. It's never going to be just one and not the other. There will be some here and there. There will be some other candles here and there. But every single time you're in a trade, and you're looking at the chart and you're kind of confused on what to do, what's happening, again, zoom out, zoom out, zoom out, zoom out, zoom out, zoom out, zoom out. Oh, you can't see the chart? Okay, hold on. Okay, let me see. Thank you for that. All right, let me see. Oh, thanks for that. Some see it, some don't see it. I don't know what that's about. Let me figure this out. It's a very strange situation. Maybe next time I'll use Zoom. Maybe next time I'll use Zoom. Yeah, I can do that. Yeah, I'll try that for sure. Let's do that right now, because we're gonna get into some nice details, all that stuff, and then yeah. All right, everybody, let's slide. All right, all right. I'm gonna start sharing my screen again. What was I gonna? So where was I? Where was I? Well, you know what? Let's just get into my strategy. Let's just do that. Okay. Okay. All right. Let me see. All right. Cool. Let's get into my strategy. Enough about bashing Tesla. Let's get into my strategy. So Let me pick a nice stock. You know what I'm going to pick? I'm going to go with TEM. Nancy Pelosi been buying that one up. Okay, this is a good. This is a nice stock to kind of show you my strategy. TEM, Tempus AI. It's a technology stock, right? So listen up, right? I'm going to start with a daily chart. Okay, start with a daily chart. Okay, so for some perspective, some say say again. Okay, if you got a question, just type it, please. Thank you. So TEM. This is the daily chart. It is above the moving average. Price action is above the moving average and has been for 2 straight weeks. Okay. Look at the weekly chart. You will see price has been above the moving average, and also you will see that we've had 5 green weeks in a row. So this stock is bullish. TEM. It is bullish. Now, the 17th of January, price was around $35, which was just under the moving averages. Now, if anyone bought it there, great. Well done on you. That's a great entry. Would I have bought it there? No, because I like to see price being above the moving average. That's just one of my criteria. Different people have different criteria for when they want to get in a stock. One of my criteria is price is above the moving average. One of my criteria is I see multiple green candles. One of my criteria is sometimes drawing a box and seeing if price enters that zone, comes back out that zone, different stuff like that. But again, we don't want to buy at the highs. We want to buy close to the low as possible. We also don't want to buy a falling knife. So again, when would I have entered this stock? Well, TEM, 21st of January, it gaps up above the moving average. It's cool. It jumps up. That's fine. Doesn't mean I've missed it. Now, what I want to see, I wouldn't buy it. I wouldn't buy it after it's jumped up. I want to see price continue and then come back down, right? So I actually want to see some red candles before I enter a trade. It sounds a bit crazy, but yes, I will. If a stock is going up, I want to see some red candles, which means it is pulling back before I enter. So how do we know what's a pullback? How do we know what's a reversal and then selling off? So for me, I want to see. Let me go to the 4-hour chart now. I'm gonna show you guys swing highs, retests, and breakouts. So here's first of all, here's some consolidation between the 24th of January and the 30th of January. It's like on the 4-hour chart, you see consolidation, which means either we could get a big move to the upside or a big move to the downside. In this case, we've got to move to the upside. So these that I'm going to mark on the chart are little. These are swing highs. All right, I'm gonna just mark them. This right here is a swing high. This right here is a swing high. This right here is a swing high, and we're going to make another swing high, or we're making another swing high right now. So the reason I say this is because if we're trading the trend, again, we want to see a couple red candles before we push again to the upside, right? How many red candles? It really depends, but that's where you've got the moving averages to kind of gauge where price might go. Honestly, anything more than 2 or 3 candles, anything, yeah, 2 or 3 candles is what I'm looking for. 2 or 3 red candles, because that's what a proper pullback is. If I see 7 red candles, that's not really what I'm looking for. I want to see 2 or 3 red candles. Here, you got 4. That's okay before we move higher, because then we get 4 green candles. This is part of trading trend. So we look at highs, we see pullbacks, retests, and then we see another higher move to the upside. We want to see swing highs, pullbacks, retests, again, moves to the upside. Obviously, if I'm in calls here, 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 whatever, and price comes down to moving average and moves back up, I will hold. If price breaks below the moving averages, if I see 6 or 7 red candles in a row, if I see a failed retest, so instead of a failed retest, we see it break below, well then, yeah, if a stock is breaking down, I will exit the trade. If the stock price is below the moving averages, I will exit the trade. If I'm getting in a trade and I'm trying to swing to the upside, well, if the stock price moves all below the moving averages, I don't want to be in that trade anymore. I want it to consistently be above the moving averages. Every single moving average is there for a reason. So the 9, I use the 9, the 21, and again the 200 or the 50. So when you do stuff like this, when you go from the daily to the 4 hour, you draw out your swing highs, go to your 1 hour, you start to see the trend, all that kind of stuff. One thing you never really want to do is enter on the hourly chart, the 4 hour chart, this and that. Because really, your entry should be on the 15 minute, even if you're swing trading, really. Even on, I'll show you, I'm gonna zoom out. Even on the 15 minute chart, you want to be entering, sorry, um, even for the swing trades, you want to be on the 15 minute chart. Really, I mean, for the entry, if you want to, because I'm very precise with the entries. Here, double bottom, I'll try and enter somewhere when I see the break of the moving average. So if I don't see it here on the 4th of Feb, then maybe here when it pulls back and goes higher. Yeah. Here I'm like, okay, 4th of Feb, I'm like 15-minute consolidation. If I enter here, it's risky at the end of the day. I can see what I'm trying to see, but again, let me go. Let me go to the next day. Just wait, be patient. Patience is always paying in this game. Patience is always going to pay you. All right, we've got the breakout. Have I missed a trade? No, it pulls back. Okay, maybe now is my time to enter. It pushes. Again, consolidation, another higher move, but then sells off. All right, should I sell out? Now, this is where you start to go to the 1 hour. You can enter. There's nothing wrong with entering on a 15-minute if you want a precise entry. But as long as you're getting that correct hourly movement, that correct hourly price action. Again, let me go back to the 6th of, no, here we go. 4th of February, consolidation at the end of the day. Might get in a trade, might not get in a trade. If I don't get in trade, I get in on the 5th of February in the morning when it pulls back. Not when it's away from the moving average, but when price is close to the moving average and it looks like it can move up again. 5th of February, go to the hourly chart. And I want to see a green candles. There we go. Doji on the hourly, but the rest of them are green candles. That's fine. Green candles is what I see. So when you see the hourly and you see multiple green candles, you should be good. Start zooming out to the 4 hour. Again, all right, cool. Price is up high, I might take profits up high there. Price goes down, might enter the trade again. It's just judging and calculating based off a strategy, based off the moving averages, based off indicators, based off market structure, based off support and resistance, all that kind of stuff. Now, let me see. I want to review some of the stocks that we've been trading recently. Because sometimes you might look at this trade and you say, okay, TEM, this is hindsight, right? Yeah, yeah, you might say that. But in theory, it's a lot of stocks that are not hindsight. I took TEM, but you might say, oh, it's still hindsight. You know what? No one can say this is hindsight. Okay. Let me see. So hims and hers, all right? You want to look at this chart and tell me this is hindsight? Nah. You know why? Because on I think it was the 23rd of January. No, it was the 27th. It was here. 27th of January. Price was down here after being bullish, breaking above moving averages and being bullish and then pulling back. Price was down here. And what did I say? This got the potential to boom, fly. Why? Because we've been selling off. Price started to break above moving average. We sold off a little bit, pushed above again, sold off a little bit. Patterns tend to repeat themselves. Okay. It came back down. Why? To go higher. Hindsight, yeah. But when it comes to real swing trade setups, you know we're there. You know we're about this. So again, HIMS right now, similar setup to SMR. All right, SMR is doing just again. It's building up. I could easily, and I will, get into calls on this. Trade it up to 29. Trade it up to the previous highs at 32. But again, right now it's building up. When we come back to this hindsight in a week, 2 weeks, and the stock is up here, back at the highs from November or even further on higher, you'll understand why. You'll be like, okay, yeah. It came back to price came back to test the moving averages. We got a retest, and then we just flew on higher. You know. Oracle. Let me show you Oracle because we talked about Oracle last week. So another one, similar setup. Moving average crossing to the upside, price breaking above moving averages, coming back down. It's going to come back down to go higher. But it might take 2 weeks, it might take 3 weeks, it might take 4 weeks. And if unfortunately price comes out to moving average, breaks below and sells off, I'm okay with that. Not every single setup is going to pay off. Not every single setup is going to go the way I wanted to, just because I thought it was going to go that way. So I like this kind of setup. Look, this is really my setup. This one right here, just starting to break above moving averages, come back down. Same with SMR, just broken above the moving averages, coming back down. Same what HIMS was 10 days ago, 15 days ago, just breaking above moving averages, come back down. Same what Palantir was, but now we've got that. But before that, just breaking above moving averages, coming back down to go higher. It's done it many times in the past 3 4 months. That's why we've been slapping this stock. That's why every time this stock comes on in the Discord, people are excited because yeah, it's gonna come back down again. It might come back down to 105, maybe maybe down 108. I don't know, but either way, it might come back down just to boom higher. It did it after earnings, gapped up, came back down, doji, pushed higher, came back down, pushed higher, came back down today. So tomorrow, I wouldn't be surprised if it pushes higher. I'm telling you, a lot of these are just repeating the same patterns on different stocks. So many of them, and I can't stress it enough. If it does break below the moving averages, if price does fail, it doesn't retest, it just breaks down. Get out the trade. You don't need to hold when it's no need. People, I know. I've seen on Twitter, people were, no shade, but people were in Tesla calls still. After there was in Tesla calls at the end of January, broke below, kept selling off. Yeah, hold those calls. Hold those calls 1 more week, 2 more weeks, and Tesla might be at 300. If you're in puts now you're doing the right thing. Stop loss when a retest fails and we start to break below. That's when you put a stop loss. And you can draw a box, you can create zones, like, you can draw a little zone, you can draw a little zone. Somebody eating on the mic? Who eating on the mic? Okay, thank you. I was like, somebody smacking their lips. So, if you don't want to do some resistance, you can do something like this, right? Something like this. Okay. You can do something like this. Why I'm capturing all these candles. Let me draw a bit bigger because I want to get the body in there. I'm capturing all these candles, or I might even do this. I might pull it up a little bit. But yeah, around there. Capturing all this consolidation. Let me see if Tesla falls out the zone. Boom. You can draw zones. Zones are there, zones are there just to kind of help you gauge price action as well. Because where price comes into your zone, and I start to see green candles coming out my zone, hey, maybe we bounce in the same zone that we were in before, where we consolidated. If I see price come into my zone, the body's closing below my zone, hey, then the trend is continuing. Then you're going to see lower lows, and you can keep buying puts. If we break below this moving average here, you can keep buying puts. You can go to the 4 hour to confirm your bias, confirm what you're seeing. And honestly, for me, this is going to 300 and maybe to 289, 283. I've got my zone there now, just drawing it live time. You've seen it. You can draw it a little bit higher. But yeah, I like the idea of puts, We can see we've seen selling pressure here. We can continue seeing selling pressure. When we want to look for calls, when we see consistent green candles and a break above the moving averages. So we don't just want to see green candles. Look, we had green candles here, 4 or 5 green candles, but we didn't break above the MAs. Now we sold off. If we get some green candles, cool. But if we don't break above the MAs, I'm not trying to get those. I'm not trying to get those calls. I'll keep the puts. Shout out Devon on this stock. This is doing the exact same thing. Some consolidation, test of the moving averages, retest, sells off. Nice. This is a trend, right? We were at 93, 30th of January. We're now at 83. We dropped $10 in 2 weeks. Especially when there's a trend continuing, you don't need to do anything else. Buy your puts for 2 weeks out, trade it down to a level of support, a previous low, where we reversed previously. Right here. We previously reversed right here. I'm not going to draw a support and resistance yet because I want to scroll back. So and we'll look at the daily too. But yeah, okay. So then that's not a bad level. It's just the previous lows, all right? So now I can just draw it here. Previous lows, $81. Shout out Devin again. Daily is bearish. Weekly is holding at the moving averages. When we break that, we slice there, we can come down here to previous week lows, right? From January 13th. Daily, actually, wait, let me use my mouse. Here we go. Come down to the previous lows from January, right? There's nothing saying you should get calls here. Nothing is saying that. It's below the moving averages on the daily. The 4 hour, every time we get a test the moving average, we sell off. Nothing saying you should get calls. When should we get calls? When we find support here, maybe we see a doji here, an inside bar, and the price starts moving upwards. Maybe when we see multiple green candles in a row. I've got a serious question. If I see 8 candles, 1, 2, 3, 4, 5, 6, 7, 8 candles, and one is green. These are daily candles, 8 days of trading price action. One candle is green. What makes you think you want to get into calls? How does that make any sense? And I will see people on social media, whatever, YouTube, whatever, saying, start getting ready to look at XYZ calls. Why? When I just seen 1, 2, 3, 4, 5, 6 red days in a row, price below the moving averages, the test of moving averages before we break down, lower lows, lower highs. Why would I be getting calls? When I'm seeing pure selling pressure, when I'm not seeing any green candles anywhere near, why would I get calls? So when a stock is having retests and they're failing, when a stock is breaking below the moving averages, when a stock is continuing to sell off, obviously it's puts. It's real simple. And on the other hand, again, shout out them for this. When you want to see calls, this is when you want to take calls. I wouldn't be taking it down here. I'd be waiting for the break above, the retest, and then the sweet trend upwards. Shout out them for the calls of JPM. That was really easy money, to be honest. Let me see if there's anything else we can spot. Sometimes we look for double bottoms, double tops, inside bars, pin bars, anything. Okay, there you go. Look at that. Right there. That tells you exactly reversal. This is a reversal candle right here. Potential reversal candle right here. Look at that body. That's buying pressure. That's buying pressure right there. Sure, the next day we got a hammer candle. Not really. Hammer candle, but a bigger body hammer candle. And then we pushed up, right? Came back to moving average, pushed up. Weekly chart, weekly chart is now a hammer candle. So just, be wary. That's all I'll say. Weekly chart, just be wary. But these are the kind of things you need to look for. If you haven't read the Japanese candlestick book, the candlestick Bible, then go and check that one out, because it will have all those different candlestick patterns. If you don't know anything about support and resistance, I really suggest you just read up on it. I can draw you some support and resistance right now, but you do need to start learning that yourself. So support and resistance, the reason I mentioned it, when a stock fails to break a level but continuously touches that level, it's resistance, right? It's failing to break above. When it does break above, gaps up. Now, where does it come down to? It's a bit close for me, so I'll do this one here again. Resistance, right? Could be a new level of support. And then, if you want to look at the structure side of things, well, this right here is not really. I wouldn't call this one of those market structure trades. I wouldn't. I'll just say this is a trade, which is a momentum trade. This is a trade that's following the trend. What about this XOM? This is exactly what I'm talking about. I have levels of support and resistance, right, on XOM. We bounced off my level of support. Nice green candle, came back to my level of support, came up again. Again, higher than moving averages. This is nice. What we have a 200 moving average right here, 200 MA right here. We'll see if the body closes below. Let's see if price can break above. Trust me, I'll be in calls quicker than you can even expect. Price got rejected here by the moving average. If price can close above on a daily, we'll be looking very bullish. At least to 113.76. That's my level from previous lows, and it could be a new level of resistance, if that makes sense. Okay, let me see if there are any questions because I know people usually have questiones. Okay. Okay, thank you. Please mute your phone. Mute your phone. We enter on 15, but what time do you determine if we were X? Okay, so the reason I enter on the 15 is because intraday, so this is why it's funny, right? And maybe, yeah, I could enter on the 1 hour, but listen, this is why it's funny. The reason I enter on the 15 is because I like to be stingy with my entries. So if we go to Exxon, for example, I'll show it to you. All right. So let's say I'm getting in Exxon, right? Exxon calls. I want to enter on the 15 after come to down to the moving average and it's pushing again, right? So the funny thing is, see, this is it. Next day, it sells off. Tuesday, 11th of Feb. So today, sold off. I'm like, oh, I want to exit my calls. Wait, no, 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 hold on. This is when this is the part in the Discord when everyone panics and say, I'm down 20%, down 25%. And I'm like, yeah, me too. Hourly. All right, today. I say, you know what? Price bounced on the moving average. I'm cool. I'm okay. Reason, like, yeah, you could enter on the 1 hour, but 15 is so I can get more of a precise entry, if that makes sense. I'll exit if the hourly is red. I will exit if the hourly is red. That's a good question. If that makes sense. So he said, for the people that's on YouTube, I'm a bit, or watching the recording, I'm a bit confused on the entry on 15 minutes. Do we enter right after the first green candle on the swing high once we see a pullback on 15 minutes or once it swing low on a higher time frame? Great question. Like I said, it doesn't have to be on the first green candles, but if I'm confident and I've zoomed out and I looked at the 1 hour, the 4 hour, then yes, I will do it on the first couple of green candles on the 15 minute. Great question though. What is the best time frame to use analyzing trades for a swing trade, intraday, daily, weekly, or monthly? For analyzing trades, so not entries, but analyzing trades, a little bit for 1 hour. Sorry, a little bit of 1 hour to just gauge what could be happening, like first and foremost, in the next couple hours, in the next couple days. Then 4 hour daily and weekly. Definitely analyze the 4 hour and the daily. Those ones I really look into. If I was looking at XM again, for that swing trade again, swinging trade, right? 4 hour, just look good to me. Wick off the moving averages. Daily, just look good to me. Break above the moving averages. Then you look for signs. The 4 hour, and you look at signs. You look at signs. You look at signs. Okay. What indicators do you use? Okay, I went through that at the beginning. So again, quickly, 9, 21, 200 moving averages, RSI, sometimes MACD to gauge price, and then support and resistance with some structure. So yeah, that was kind of answered at the beginning. How do you pick your runners? Oh, that's easy as well. When I'm happy with my percentage, when I put the money that I put in, I get back. When I'm closer to expiry, I'll leave a couple runners if I don't mind if it goes to zero. If I'm way, way, way further from expiry, I'm not going to leave runners yet. To be honest, I won't. I'll still keep what I've got. Um, yeah. What are the questions? What is your trade setup and risk management strategy? I can explain that right with the break below the moving average, get out of the trade. Look at the higher time frames to see if I still want to stay in the trade. Like I said, I'm entering on a 15, but I'll look at the hourly and 4 hour before I decide to sell off. That's why I think a lot of people sometimes get knocked out of plays. How do you catch the bottom? I don't really catch the bottom. I'm precise with my entries, but again, which stock was it that I said? I think it was HIMS or TEM. Yeah, it was HIMS, right? This is the bottom here. I didn't catch that because it's still below the moving averages. I didn't even catch it here because it didn't break above properly. I caught it up here. I caught it pretty high, but I see the long-term swing potential, so I don't catch it at the bottom. Catching at the bottom is very difficult, and I think that's more of a day trader strategy, which I don't like to day trade a lot. So swing trader strategy, you don't need to catch at the bottom, if that makes sense, right? Bob was joking the other day about the guy that jumped in the trade with me, 3 days later, and he was up 183%. He didn't catch it at the bottom. He quit. He probably quit at the highest of highs. So, sometimes that's just how it goes. So, I don't catch at the bottom really, unless I'm day trading at a zero DTE, then yeah, maybe I will. What point should one scale in and out of position? When you're happy with your returns, man. With which stock was it recently that I took? Mm, which one it was? But either way, there was one, and I sold out after the second day, and it ended up running more and more and more. Well, I missed out on that, but I was happy with my return. So when you should scale in and scale out, scaling in when you see that the chart is clear, like JPM this morning, people that was going for calls, that's when you scale in. It was clear. We just looked at it together, right? JPM. That's when you scale in. That's when you average down. Sometimes you can even average up JPM, right? Cool. Daily chart is nice. 4 hour. Everything's good. 1 hour. A little bit rocky, but starting to break. We start the day pretty bullish. Then you average in. You average up. Sorry. And you just go back to daily to get some confirmation. Yeah, we good. It's just a little pullback. All right, I average in. Average out. When you're happy with what you got, when you put your initial investment is done, there's people in here, I've seen them, 185%, 210%, blah, blah. You're not happy. That's you. I'm happy with my 185%. I'll scale out. I'll leave one or two, sure. I'll scale out. I'll take some out. What are the questions? After you answer what's question above this, comment, look at these questions too. Okay, yeah, good. Thanks, SPX, for all that as well. That's helpful. He posted this in question. Hey, if you got 15,000 and you're trying to flip it, what should you do tomorrow? All right, so I like these kind of questions. If I got 15,000, I'm trying to flip it. I'll show you what I'm doing. This is what I'm doing. If I got 15,000, I'm trying to flip it. I'm going to S&P 500. I'm looking where we're at the highest. Okay, I'm leaving that alone. I'm going to the ETFs. Okay. We're also at the highest. I'm gonna leave that alone. I'm gonna show you something right now. This is why I'm doing it. IWM pulling back a little bit. Okay, where are the highest? 245. Nah. All right. Let me go to the big stocks, the blue chip companies. Amazon. Oops. Amazon. I got 15K. Remember, I'm trying to flip it. We're too close to highs. Okay. Google. Aha. Okay. We sold off. 187. All right. I'm gonna wait. But when Google starts to come back up, I'm gonna get in and trade it to the upside. I'm not. If I got 15K, there's nothing that, like, if I got 15K, I'm looking at the big stocks. I'm looking at the safety stocks. I'm looking at the money makers. That's what I call it, the money makers, the metas. Got 15K and I'm ready to throw some in the market. Yeah, I'm looking at this, but not when it's at the high. When it comes down here, sure, I'm looking at that. I'm going for the safe bets. I could put 15K in one of these. Am I doing that? No. You got 15K and you want to flip it. What should I do tomorrow? Tomorrow I look at all my charts and see if there's anything for me. I called out UPST earlier in the lounge. I said, watch UPST. Would I have put 15 into this? Nope. It's up $18 now. Would I have put 15? Nope. It's up here now. No, I wouldn't have. That's it. That's just realistically 15K and you try to flip it tomorrow. I mean, do you want to lose it all? Do you care about it? I don't. If I got 15, I'm trying to flip it. I'm not going crazy like that. So yeah, I'm not trying to gamble it away. Away. I don't want to gamble it away. But a good question though. Thank you. That's just me being real. I can put that in there. I'm not going to do that. You know what I mean? I don't want to gamble it away. Sometimes people are not happy with 100% but should scale out. So when you're happy with what you got, some people will never be happy. You think I made it here by not being happy? Come on now. Let's be real. Let's be real. Do you think, come on, let's be real. If I was never happy, you know what I mean? Come on. Let's be real. If I was never happy, I wouldn't be like that. This is the thing though. People don't want to lock in profit. People want to gamble earnings. Come on. You gotta be clever. You gotta move around this market, navigate it like you're in a boxing match, You gotta move around there like you're a boxing match. You ain't going there throwing the biggest punches in the first round. You're not going there just punching, punching, punching. Nah, you calculating, you jabbing, you bobbing your head a little bit. You just seeing what's up. You know what's up. Then you're just figuring out what you want to do, what strategy you're going with. You're not just going in the first round just swinging, big arm swinging. You say, yeah, if you're not happy, yeah, Muhammad Ali, yeah, you got to be out there, just floating, 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 and then boom, sting, D, like that. You can't be out here just trying to gamble your way up. If I go tomorrow and I put 10 in a play, 15 bands in a play, oh my gosh, and it goes the wrong way, that's when you start panicking and you start worrying. Sure, yeah, sure, sure. It could have gone to 50K, 1,000K. There's a reason that you see me put in 100 or 200, 300, 400, 500 in a play. There's a reason you don't see me put in 1K, 2K, 3K, 4K. You not remember my Tesla loss? It was only 1K I put in the play, but still, I was like, oh, I'm not happy with that. Where was that? That was 2 weeks ago, I think. It happens. Yeah, that's it. I put 1.1K in a play. Yeah, it's terrible. I don't want to do that. So if I got 15K, you know, I got 15K and I put it in a play, I'm not doing that just to lose it. I'm trying to make some money. So I'm gonna go look at the big boys and then trade them to the upside when they do start moving slowly. I'm gonna buy March expiry, I'm gonna buy April expiry and let Google come back cover. I'm gonna buy June expiry and get in on a PayPal, on a company that I believe in. I'm not going to get too much in fundamentals right now, but really, if I look at some companies right now that I've been telling you guys about, AMD, SoFi, Palantir, Cheesecake Factory, Snow, you know, those ones I like them long term. Why do I like PayPal? I understand their business model. I understand what the CEO, Alex Chris, is doing. I understand the things that they're doing right. Sure, the earnings didn't go well last week. That's fine. I'm going to zoom out. Right? We're talking fundamentals. Then, we're looking at Yahoo Finance, we're looking at CNBC, Bloomberg, we're looking at technicals, we're using TradingView. Okay, who am I zoom out? Look, 6 months ago we were at 59. Okay, cool. I don't mind it being at 76. That's cool. Palantir is the same thing, right? Alex Karp, what he's doing with the stock, what he's doing with the company. Look at that. 4 months ago it's $25. 5 months ago it's $40. Cool. Intraday, sure. Oh, it sold off. Ooh, big news. Ooh, this and that. That's fine. Oh, I don't know what to do. Zoom out. Zoom out. If you got 15K, zoom out and just play. I wouldn't even call it playing safe. Just go with what you know. Snowflake. If we're talking fundamentals, Snowflake. Again, this is just one of those companies where analysts keep reviewing their price targets, deciding what they want Snowflake to do, if they want it to go up or they think it's going to go down. I think last time they had a great earnings. I'm bullish on this. I can expect a bigger move. I'm expecting a bigger move to 200, to 219, to 280. I'm expecting that with Snowflake. So yeah, I'll go and buy 10 shares of Snowflake. If you got 15K, put 2K into Snowflake. 1.8K into Snowflake. 10 shares. There's bullish signals here. If you want to look at SoFi again. Someone mentioned it today in the chat. That's why I'm bringing this one up. It's fine. It's bearish right now. Watch it. If it bounces along on my level of support and starts breaking above moving averages, and I see green candles, SoFi, I'm cool with that. SoFi, I understand the business again. 7, 8 months ago, no, not even that. 6 months ago, I was telling it at $6. I said, this is a great company. Now, because it's dropped from 18 to 14, we're worrying, we're panicking. What about when we were at 6? What about when we were at 7? What about when we were at 9? Nobody was expecting it to go to 18, so that's fine. It's not about the here and the now. It's about the long term. SoFi is a company that's got banking on lock. They cover so many different aspects of banking. The loans, the credit scores, the mortgages, the checkings account, the savings account. It's unique. It's a unique company. They got mobile app, web app. It's a unique company. You zoom out again. The guy said today, and I'm not slating you. I'm just saying you said today that SoFi is suffering. It's down. This and that. Yeah, it's suffering right now. Cool. What about the past 2 years? You want to see suffering? Wait. Let me zoom all the way. You'll see suffering. Trust me. So we're at 1483 right now, okay? What about 2 years ago when we were at here? What about when we were at here? $5. When we were in the trenches at $4. What was that? If we're suffering at 14, I don't mind. I don't mind the suffering at 14. What about when we were down at 446 in May 2023? That was suffering. So zoom out, put your expiry later out. Look where the big hedge funds are selling. The big hedge funds are selling at 18. Okay, now we know. Big hedge funds. Hmm? All right, good. Okay, so as I was saying, so far, right? Someone said we're suffering right now at 1483. For someone who's been in SoFi since $6, this isn't suffering, right? Get your expiry, move it to March, move it to April. When we're back at $18, $19, when we're back at 25 in June 2025, then you want to understand, okay, yeah, we got to zoom out. Let's wait for now. Let's wait. The big hedge funds might sell here. Sorry, might buy here 1450. The big hedge funds might buy at 1360. I don't know where the big hedge funds are buying, but I know where they're selling. So you can prepare yourself, right? Um, for me, this is a $25 stock, maybe $30 stock this year. Again, I like SoFi. I know that the CEO Anthony Novo, he knows what he's doing. This is a great company. So if you don't believe in the technicals, look at the fundamentals and then get yourself some peace from that. It doesn't matter if you're trading Nvidia, you're trading ARM, ABGO, whatever you're trading, AMD. AMD, this company is disrespected. Cool. I don't want to get too much into fundamentals today because I know this is more of a swing trading strategy. But yeah, AMD's been selling off. Cool. It's not really a respected company, but you got Lisa Su in charge. She's committed to the cause. They've been. I remember when I sold AMD at 20, 29, 30 back when. So I'm not worried about AMD right now. So long term, if we long term investing, you know, these guys. Hold on, what's going on? AMD. There's going to be new chip model opportunities. There's going to be, tech is continuing to advance, blah, blah, AI, all that. So AMD, I'm not worried. So I'm buying shares. That's why I'm buying shares. We tried the call options. You guys remember we didn't do well. So I'm buying shares. The CEO of this company is taking it from a very little, when it's down here, very little, to a lot. It was $200 stock, right? So for me, there's a $200 stock, $250 stock staring at us right in the face. This is a, I'm not going to get into fundamentals right now. This company. Wait, I thought I thought I muted this guy. Okay, now. Yeah, so AMD, long story short, they're well positioned for success. They're one of the strongest companies in the world. Again, right now, it's in a bit of hot water. Looks like puts are the way to move, still below the moving averages, but long term, I'm going to buy shares of this. I buy more shares. Like I said, there's going to be new chip models, more tech opportunities while tech is advantage. Sorry, tech is advancing. It's going to put itself at a company advantage in the market. AMD has already brought itself a lot of opportunities in the last few years. Yeah, I'm not worried about a stock that's down here. Um, yeah, this is a. How much the market cap of AMD? 41 million. SMCI. Great, great. Let's talk about it. Yeah, this is going to go up. Just wait though. It's going to break above the moving averages. Once it breaks above this one, I like the calls. This is what I'm talking about. I like this. Just steady. You're going to pull back, go up, pull back, come up. Once you break above the 200 moving average, yeah, I'm down to ride. Until now, it's been puts, 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 puts. That's it. All right. Any other questions before we log off? We've been going for about 55 minutes now. I thoroughly enjoyed this too. I hope you guys are actually learning from my strategy. Really, it's about patience. It's about combining the moving averages, the technical analysis, the fundamental analysis. It all comes together and it's a beautiful thing. It's a beautiful thing. All right, folks. I ain't gonna get into Celsius, but I mean, I like Celsius. I like Celsius. Another great business model. I've been in the market long enough to see Monster suffer like this. Celsius is now suffering like this. It's fine. We get the right news at earnings. We get the right bullish momentum, and you're gonna see this moving up. All right, folks. That is it from me. Thank you to everyone who tuned in the Discord. If you're on YouTube and you're watching this live after hours, please remember that we are live in the Discord every day. We trade in there, we talk in there, we do all the stock breakdowns, all that kind of stuff, and more. And of course, if you don't have the stock option starter pack, make sure you tap into that. That's 10 videos that talk about trading strategies, Greeks, my trading strategies, general trading strategies, covered calls, selling puts, buying puts, all that kind of stuff, terminology, and way more. So make sure you check out the stock option starter pack. But thank you guys so much, and we'll see you in the next video. Peace.